This is Dan Max at XP Realty, aka the Trading Agent. This is your live market chat, Tuesday, May 2nd, 2023. Hopefully you're having a good day, interesting week setting up. Definitely be prepared. Grab some coffee, get comfortable. If you watch this after the fact, we're just going to talk about a lot of the things that we should be looking for and thinking about, mentally preparing for what I would consider a battle coming up this week. Some people probably will abstain, stay on the sidelines. Some people will try to trade it. Talk about the pros, the cons, benefits of all of such, and yeah, what to expect. So let me get a mic check real quick, and then I'll jump into it. Nasty bull trap yesterday. Not surprised that on the Tuesday post, buy the rumor, sell the news on the banks, the market is a little weak. Now, will it absolutely dump? Tough to know. But based on what I'm seeing in some of the markets, it doesn't look strong. Because, I mean, at this point, a lot of people here are talking in the Discord room. Again, if you're new to the channel, want to jump in, link is in the description below. All I advise is you get involved. We don't need more people who just sit on the sidelines. You can follow in other places on Twitter and whatnot. So yeah, let's jump into it. So as of right now, it looks like the feds are, people are talking about like the FDIC insurance, like they're talking about restructuring it. They're starting to realize there's probably going to be many issues. Now, I don't know why they gave JP Morgan the buddy pass, free deposits, and not any of the debt. But we've talked about this for what seems like millennium now. And the reality is what? There's a ton of dead, useless debt, whether it's commercial or government debt, low yielding, no desire to hold because of inflation. It's just kind of a mess. So at this point, let it be kind of thing. It's just, I don't know when this tidal wave crest onto the beach, essentially, but it's like you can see it coming. And so people are thinking, this is the thing, you get lulled to sleep. We've seen this a lot of times, especially in a bear market, up and down, is that you just, the complacency at the highs and then at the lows, like the world is going to end. And we keep facilitating between that, but we haven't seen the max blowout, right? Everyone who follows understands. Like, we have not seen the worst of the bear market. Bear markets end when everybody gives up, VIX spikes, explodes, people, whatever the cause of the bubble ends up bursting, right? And I would argue the liquidity bubble is the problem, that they've got to tame inflation. If I'm the Feds, inflation first, unemployment second, economy and unemployment second. And, they have a dual mandate. And at this point, the best way to kill inflation would be to what? Just be very upfront about what they're going to do. And people will cry and whine and all this stuff. But it's like, watch the TLT today, right? Like, watch the TLT as we get into the Fed meeting, right? Because I personally think, let's just jump into the charts. As I've said a thousand times, like, this thing's getting wide and loose. Like, yesterday's action, breaking the channel lows and then rallying right back up, kind of feels like the TLT might be ready to bang. And when I say bang, I mean like higher. Like, look at oil, slaughtered. Not gas, flat, whatever. But materials names, beaten, banks. I've said this and I repeat, maybe I'm the only one saying this and you don't hear it that often. I really think the Feds have an idea in their mind that the best way to get liquidity out around to help them fund ultimately their next round of QE supporting the market, or even if the government wants to decide on doing a stimulus, is that they need to get money moving into bonds. Because a lot of people keep talking about, there's tons of money on the sidelines. Yeah, it's gone into money market accounts. It's gone into fixed income that is stable. And again, people say, well, isn't that a fuel for the next bull market? Yes, but does that have to be right now? Like, go look at the levels of cash or money market fund levels at other bear market peaks, and you'll start to see, like, you could argue that. I mean, another thing that we got going is, a huge short interest in the ES, right? Like, people keep talking about that relentlessly. And it's like, well, they were huge short in August too, before the big dumper. In my opinion, I think it would make sense for me if I think about if you were a hedge fund or you're, a strategist and you're like, all right, I'd like to have a short paired against my long. And so then when I do decide to pull the plug on stocks, or I'm giving myself a wait and see kind of thought process, you're hedged. That's how I've seen it. And so that's where it shows me, like, I don't think people understand, like, I don't think there's a lot of tenacity to own stocks going forward. It's more of like you have to, because that's what the market's, that's what they're like wired to do, right? Is to buy and hold stocks. Well, at some point, if you are a money manager and you're, the house of cards, like, why wouldn't you have some hedges? Now, will that keep the market from going lower? I think it'll provide more of just it'll provide more volatility. That's what I'm thinking. I think you're going to see bigger ups and downs at some point when we do decide to flip the script and head lower. And then again, it might be one of those things where, in my opinion, like, it's kind of like the market makers, they have short positions to use to create choppiness within a trend, right? Like, nothing goes down in a straight line. Well, they got to reload, rebuild, do such things. And what will probably happen is, if I had to guess, sell in May, go away, whatever, maybe May, June, like, you probably have a big down at some point. Maybe you get a quick squeeze up, or it just, again, the vacuum. This is what I'm worried about for bulls, is like, the breath is terrible. I mean, once people stop buying tech stocks, what else is, where's the money going to go? And that's where I think it all revolves back to the dollar, potentially, and bonds. That's the Fed's goal here. Like, think about, like, what they want. It makes total sense that they would want this capital that is just floating around to go into what? Bonds. But they're also buying gold, so they're a little pissed off. So that's where I think, you have to remember, central banks hate gold. If you don't know why, because central banks look at gold as competition for a currency, right? And so a lot of people don't realize, is like, that's how they've always measured their report card of soundness of their money. If gold and other inflation hedges are going nuts, they look at themselves like, oh crap, we've lost control of fiscal policy, essentially, right? And so that's why for years they've been trying to manipulate it, and it's like, at some point that ends, because they give up trying to control it, and they admit, like, hey, the dollar, currencies in general are a joke. It's just debt. But it's an interesting conversation, because we could go for 30 minutes about that. So if you have any thoughts, questions, concerns, let me know. But as of right now, it's the Tuesday before the FOMC. We dropped, not surprised. Is anyone surprised? We talked about, like, this being a bull trap, this pop-up. We said this candle did not look good. Remember that? If you watch the daily market recaps, we gapped down. I mean, we could probably get right back to 404 very quickly, and nothing would be, like, that dramatic in my mind different. And then what could happen, right? You got the FOMC. I'm still thinking in my mind that a week from now, the market will be down. What will happen between now and then? No clue. No clue. And people are like, how can you say that? And it's like, because I've seen this action come down. Because again, in a trap, the first direction is a trap. What if down is a trap to rally back? Then on Thursday or Friday, when the jobs numbers comes out and Apple's earnings are what they are, the market turns right back around. And so either you have to be comfortable in your positions where you're at, like if you shorted JP Morgan or financials at the highs, for example, you're feeling pretty good. If you had the cojones to take a snap at SMH, like we talked about the levels yesterday, said watch the 250 area, you got it. Just, got around this morning. Microsoft filling the gap, talked about it. I mean, you pick and choose. Like, I'm amazed sometimes how people ask me, like, what do I do now? And it's like, well, you weren't willing to act at the extremes, and now you want to, like, short as the move starts. Where, again, some people go, well, it's confirmation. Well, be prepared. Be prepared for whipsaw action. I'd love to see it just go kapow. Drop real quick, fill the gap, say for JP Morgan, or just like the market just unload. But remember, the more the market's down, the more the Feds might start changing their tone, right? Like, you have to be thoughtful of like how the market action is going to be construed and also interpreted through the lens of the Feds. So any thoughts or questions? Because this is what like I said, this is why if you can short the highs, trade around it. And if at some point you're not sure, take some off, manage your positions, or just expect things to do what they're going to do in time. I don't think anything's fixed. We've said this for weeks, going on what feels like months. Like we said, watch the 20-month on the SPY. There it is. Like again, this 20-month has been supportive and barely could stay under it for the start of the bull market. Now you have a curling down 20-month. You bounce back to it. I'm telling you, just when, not if. That is the question. If you struggle with the whens, well then try to take this time factor out. Because I'm telling you right now, the hardest thing is timing stuff. And again, timing, like you can time like the levels and get in at spots that make sense. But I mean, I say this all the time to people. Like I would love to say I short JP Morgan at 142.50 and it just dumps right away. Well, it didn't. It just held up all day yesterday. Right? Oh, that's the monthly. My bad. Right? But it didn't look that good to me. Right? This gap up. I mean, I'd love to just give it all back. Well, today looks like it's going to do that. So, any thoughts, questions, concerns? I mean, people just ask, they have so many thoughts about things that they just can't control or doesn't matter near term. And that's what the brain does. Like the brain's like trying to say, well, the market's got to unload and dump before the Fed meeting, and I have to do this and I have to do that. You got to stop lying to yourself at some point and say, I don't know. And I'm going to manage my positions through the idea that I'm not sure. I like my areas, and I know I need to be patient. And most people just can't do it. Because again, the day traders and most folks, that's what wrecks their ability to like manage their positions and swing trade. Again, do I day trade? I mean, occasionally here and there, but I don't want to babysit the market. Now, the market does some cruel things. Like no one's going to argue that. End of last week, I go out of town and I'm like, all right, let's take some, cover some hedges, right? We expected the market to dump, hedged it, expect some rally, and then look what it did. It went way higher than I thought it was possible before it took in off the hedges and out of town. But now it's Monday or it's Tuesday, and I'm, in a better position than I was, or equal. And just like one of those things where I don't know. And again, when you use hedges and you sell options, that's great. Pay yourself. If you're trading options and you have puts, for example, and you're thinking big moves, man, you got to give yourself ample amounts of time. Got to be in the money, or at the money at worst, because you just don't know. I mean, I'd love to tell you that it's going to be Wednesday or Thursday the market dumps. I don't know. There's so many moving dynamics right now. But the evidence, I mean, if anyone has any questions, if not, I'm just going to wrap through the evidence and show people like how obvious it is to me when you like look at the breadth and you look at, again, if you exclude Microsoft, Apple, Nvidia, Meta, I mean, you look at the market, you go, what the, huh? That's how bad it looks. So let's just, no questions, good. People are good. TLT. Let's wrap through it. Talked about it blowing down. Watch what happens now, rallying back. Again, if the market dumps and the bond yields go lower, that is fear. That is exactly what the feds want. They want people buying bonds. Volatility in bond market. Remember, stable bonds, whatever. Volatile bonds, Dollar. Talked about getting over the 20-day. Watch the beep, 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 out. Now at the 100-day. Now don't be surprised if it chops around with the feds, right? Don't be surprised. The VIVIX. Didn't I say yesterday? I've been saying watch it. Keep an eye on it. Making a higher low. Okay. The VIX today. I mean, how many people thought you'd get to a 15 handle on the VIX yesterday? Mind blowing. So we talked about the first bounce. Probably some sort of lower high retest or lower low. That's not on my bingo card. I did not think that was possible. Well, look at that. Turn around. SPY. Hits the 20-month. Look at yesterday's action. Gaps down today. Again, your next level support, probably the 404. QQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQQq q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q q crap. Felt very, again, I mean, think about like the exit liquidity. If you were a market maker and you created that gap up and you got all these, and again, bulls don't want to hear this. I'm going to call you idiots for chasing, because it'd be like shorting down here. Right? Like, I'm sorry. You're an idiot. And yeah, look what they did. Remember the IWM talked about it lagging. It was going to bounce. Oops. It failed again. Look, pops through the 20-day. We said this area would hold. Hey, look at that. For once, we're right. No, you know what I mean? And now we're backing right through it. Keep an eye on it. Dia talked about this for a while. Lower highs, chopping. Looks like crapola. Now it's under the 20-day. Probably need to watch just the 333 area. Gold. Hey, gold's rallying. Good. I mean, I own physical. Cool story. Talked about it chopping. FOMC meeting. Tough to know. Silver lagging. Again, people who want to own precious metals, I don't blame you, but I'm not involved in this space until we get a market dump and a Fed pivot. Because again, I still think there's way better juice. You know, you can make 10% in gold, but you probably can make 10% shorting Nvidia in a day at some point coming up. You don't even realize it. Silver, meh. GDX, not surprised it's holding. This was support area. It's just chopping around. Whatever. I don't. Moving on. Oil. Texas T, not good. Right? XOP, warn folks. Keep an eye on it. Gets up to this area, failing. Did anyone watch the market review yesterday? Give me a thumbs up if you did, because didn't we say watch out for ExxonMobil? Is that not a bull damn trap? Takes out the highs, gaps down yesterday. Hey, doing my Indian chant, like, uh-oh, make it rain. That does not look good, right? Pretty simple. How about solar? Make it rain. I thought we might even bounce. Nope. Chopping around. I got a lot of flack from people saying, you're an idiot for thinking solar is going down. I'm like, you're an idiot for thinking it's going higher, because subsidies probably get cut. Now that you have a Republican House, and do you think 2024 is going to be friendly for, again, I don't even want to get into the political debate about it, but just in general, green energy, if oil gets slammed, this is what they always do. This is how they get us rehooked on fossil fuels. They get so cheap again that it's like hard to flip. Solar, adios. Your favorites, financials, baby. Yes. Talking about 3250. Hey, man, how we talk about retests? First bottom drop is not always the best. I know if Jay Solstice is listening, he got short JP Morgan. I'm like, I'm going to let it play out a little bit. Here we go, rally back. First Republic bailout. Now all the FDIC, you know, there's so much of a mess going on. Oh, man, market's getting a little queasy. But not surprised, right? Are you surprised? I'm not. Here we go, 3250. Now it takes out 3250 in the 20-day. Beautiful. Remember, on the monthly, again, if you are trading this, financials, and you were bearish, give yourself time. We bounced at the 2009 highs. We bounced that support, but when it's time, it's going to get ugly. And you might have one or two of these big months and then a rally back. Just keep that in mind. Because, again, as the banks fail, this is the thing. Like, people forget 2008, 2009. It wasn't like they all just went off at once. It was like a domino effect that just got worse and worse and worse. And then eventually, like, they all started to fail and the feds had to do something. Right now, this one by one kind of like thing is like they think they've got it under control, which we all know that the feds never navigated a soft landing, and the feds are a bunch of incompetent. Beep, 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 beep. Okay. Materials. Didn't we say, like, watch steel, watch some of these material names? Does this look bullish? Can anybody look at this chart and say, wow, that's looks like global growth and strengthening economy. U.S. Steel looks great, Dan. I should buy that. No. CF earnings come out today or yesterday. Pop, flop. Look at that. Remember Aaron? Popped. I'm like, this thing is dead. Like, don't you think these material names would be much higher? Global growth was coming back. Caterpillar. Pops on earnings, and then what? Giving it up. Give it up. Remember we talked about the transports. Like something smelly here, right? Held the lows like the IWM. Bounces back. They don't, again, watch the action here. Because, again, is this just a counter rally fail? Housing. Now, a lot of people have been, talking about, like, the new mortgage stuff. That stuff is absolutely crazy. Talked about that. Why it's holding up. I mean, we back-tested some trend lines here from way back, I guess. I mean, however you want to draw it. Buy the rumor, sell the news on their earnings. So I think their best earnings are behind them. Right? That's how I would kind of guesstimate it. Remember even like FedEx, right? Like if the market's really strong, like it gapped up and it's been chopping around, it's not taking out the highs. And if you go look at like the weekly, monthly, it's gotten really choppy. Things I just kind of scroll through on my own. People were talking about, when are they talking about Nike? Chopping around again, all the stuff like trying to rebuild, repair. Hence why a lot of people are like, oh, the market's bullish. And it's like, I don't know. I don't believe it. Wells Fargo, here you go. I mean, look at these names. Last couple of days. Like, look at these rallies. Talked about the regional banks. Terrible. We haven't, and that's just a few of the things. I could get into way more, but it's not. Let's get into tech, right? Because AMD, right? It's been lagging for weeks. Taiwan Semi, lagging. Hard. Netflix, lagging. Tesla, lagging. Amazon, lagging. Whatever. You do it. But let's all pile into Microsoft and hope we're not wrong. God, this feels like exit liquidity. Let's all pile into NVIDIA. That's the smart thing to do at the highs. Yeah, just probably like they were trying to unload down here, dummies. Yeah, I'm just Starbucks. Someone who's shortish Starbucks? Someone talking about that. That makes sense to me. Look at yesterday's candle. We'll see. That's a little ominous to me. I mean, does it make sense? I mean, again, I think they have earnings coming up next week, maybe. Oh no, sorry, Shutaki. It's after the close. Today. We'll see AMD today. I mean, all these names. SMH as a whole, right? We talked about things don't really look that great. Here you go. Said yesterday, put out an alert. Watch the 249, 250 area. Donka. Again, I'm trying to just post the things that I think are the most obvious. I'm not trying to overthink this market. And it sucks that NVIDIA and Meta have been stronger. Even Apple. Again, because I don't trust them. I trust them like, kids with a box of cookies. Like, it's just, at some point, they're going to steal the cookies. And in my opinion, like what's going to ultimately happen, man, Micron today too. It's a trap. And once they unload, keep in mind, they might unload harder than other parts of the market. Because keep that in mind. Because there's stuff that's already down, right? The stuff that's already down, yeah, that'll get punished. And that's where I'm interested to see how materials hold up, right? Like when the market starts punishing tech, will materials find bases first? Does that make sense? Like why I think it would? Because they're already down. Now, again, they could still take another 25, 30% down, but they're going to have certain support zones that I think are going to make very clear sense. And they could actually temporarily get violated, just like tech went higher to the upside than it should have, right? Certain ones. So beware of I'm putting my notes just to remind myself, beware of extended downside in materials levels, but don't be scared. Like, don't be scared, if that makes sense. Like, you will see price action that will scare the crap out of you, but you'll have to just keep in mind, like, hey, this is where I want to party at for the next cycle. You don't want to buy the outputs. You want the inputs, playa. So, pretty quiet morning. Tuesday before OPEX. Clearly people watched the video, but it is a little bit of a little fireworks today, which is surprising. But is it really? I mean, we talked about yesterday's rip. action and then the rip last Thursday and Friday. It just, you know how you like have that sense of smell? I always joke, like, it smells like a trap. It smelled like a trap. It smells like a trap, smelling like a trap. Oh God, I've got idiots. I'm just looking at my stock twits and they're like, you're an idiot for saying ENPH was expensive, isn't cheap here. I'm like, so you were right in the 300s, but now it's a buy. It's like, you don't know what the hell you're talking about, cowboy. You don't know what you're talking about, because when I look at ENPH, I don't give a crap about earnings or fundamentals. I look at this big monster channel, broken, romper, a broken. And I don't give a crap. In a bear market, you're going to get penalized. Maybe would you take another 50% haircut from here to tell me it's cheap? I guess. I don't know. Stupid. But it's more naive. Haven't heard from Birdie Maker today. That's the thing. There's a lot of people who trade the markets and they give up trading and understanding that, like, there's things called a bear market and a bull market. Bull market, hold through, right? Chop, but you have to be careful of individual names. That's the hardest thing I still have to do. Like, cause there's like certain sectors that, like 3D stocks or Bitcoin mining, like they'll go nuts and then they'll give it all back. And the true value will be revealed later on in a bull market. But, buy and holding today, right now, for the long term, yeah, you might want to disappear. Because again, I don't know how bad this could get. I mean, I don't foresee the Feds just giving up. Because think about it, it's 2023, the election's next year. If they're going to nuke the market, right? You probably need to get it. They're going to nuke it now. This year. That's my guess. Because then they can try to pass some sort of stimulus or whatever. Pass some sort of market stabilizing crap later. No. Hey, good morning. No, I wouldn't take any long positions in fertilizer. I mean, I know they look like double bottoms. But, I mean, again, it's like, what do you want to go short or do you want to go long? Because I guarantee it's hard to see real upside in these names unless there's a certain thing, unless there's like a fundamental catalyst that I'm not aware of. These names will get sold. It's just, I think they'll base out first. I think it'll look similar to like something like this up here. Like they'll just chop out. They'll make some extreme low. Maybe it's 62. I don't know the price action. And then it'll be like, well, okay, game over. Everything unloads. The breadth now will become like everybody, like there'll be like, for every sell there'll be like whatever 1,100 buys in them or 1,100 sells for every buy in the market. Just like unload, panic. These names will get tossed out. And then they'll either be at new lows, equivalent lows, or higher lows, and then I'll take them. I don't want to babysit fertilizer stocks through a market smash potential in time. I mean, it's a bear market. The capitulation has not happened in the bear market. The Feds have not pivoted. So it's one of those things. My experience says just be patient. Be patient. They'll let it come to you. And if you miss it and you have to buy it higher later, well, at least it'll show strength for a reason to buy. And if it doesn't, and the wave takes everything out, I mean, you're going to get incredible deals on things that'll rally right back stronger. And remember, small liquidity or lower market cap liquidity names, I mean, they'll go freaking nuts. It's very tempting. It's very tempting, right? To go big in. Yeah, I mean, I think there's 1,000 better trades than buying fertilizers. But also said wait on gold and was, wrong but right. We bought gold at the lows, took profits and said we're just going to wait. Could material fertilizers do that? I don't know. And it's the same conundrum that I'm dealing with now. Like, would I rather short tech or buy gold? I mean, every time I go back to it, it's like short tech. Short tech. That just resonates in my brain. Second quarter. I mean, there's so many little things. So, all right. Well, good chat. I mean, seems pretty quiet this morning. Anybody have any questions, any thoughts, concerns, loves, hates, feedback? You know, have a specific question that you want me to answer? I just, again, I mean, this day might be literally done, in my opinion. Like, whatever the lows are, we could trade out around these levels. And then going into the afternoon, I don't know. Either way, I feel pretty comfortable. At this point, I'm not going to be hedging any positions on this down move unless we get more extremes. Because I could see the market giving back a lot of those gains. Because I don't know how the market gets away with the idea that, you know, convincing people that, was it ever really a question that they were going to raise rates? Like, it's kind of a joke. I've been trying to warn folks for weeks. Like, the Fed fund futures rate, this is the tell. The market's not going to, the Feds don't want to upset the market. It's a rate hike. Have we talked about NVIDIA and Meta? We just kind of talked about how they held up. I mean, there's really nothing to say other than, like, there's monster shorts in this. It's just what levels and when. Like, it's kind of like buying this down here. Like, MQ, if you're not familiar, we talked about, like, Meta, all the firings, like, buy the rumor, sell the news. Like, they tanked everything. And it was like people, we talked about buying down here. Right? We talked about the upside target zone near term. It was pretty close, and then it continued to rip through. But again, the whole market ripped higher, not surprisingly. And then they announced they're laying off more people and sucked up a lot of liquidity. But this is where you're at. It's just the other side, in my opinion. How much higher does it go? I don't know. But if you told me, put a gun to my head, what do I need to do? Should I do? Absolutely short the crap out of this with defined risk, tight stops. If you buy puts, buy Junes, Julys. Give yourself time. NVIDIA, the same thing. Again, like, people don't understand. Like, this is the same thing that happened in every market. Like, especially in a bear market. Like, the leadership narrows because the whole market can't follow. It's another sign you're in a bear market. People just kind of like, I don't know. And you're like, no, it's really kind of a joke. Right? Like, it's just a matter of when. Because if the leadership is narrowing and people keep funneling in, it makes the leaders actually more vulnerable, right? Because you create like this all-in effect. So everyone's scared to buy the rest of the market. So they all pile into Meta, NVIDIA, Apple, right? Microsoft. Dangerous. Because now who's left to buy? Now who's left to buy when someone starts pulling the exit and they need to cash out? Right? Who is left to buy? You have to ask yourself these kind of questions. And that's why I like materials at certain names and certain places, because I'm like, who's left to sell? These names have been going nowhere for a decade. They've got very defined levels. Who's left to sell? Think of that psychology there. Does this make sense? Any questions on that? And to think that, like, and this is the thing I try to explain, like, if you think Meta's rebuilding to go higher, you're crazy. Their business model, their ability to generate cash, I mean, they're not paying influencers anymore or content creators. Content creators will not post places that they don't get paid if they bring in content. Now, and people say, oh, it's Meta. It's like, well, MySpace was like that. There's always a different, like, earlier iteration. I don't know. Again, I'm not saying Meta's going out of business, but does it deserve to trade at a whatever the multiple is? Let's look real quick. I'm just curious. What is the multiple on Meta? Anyone have a guess? Like, you're paying for negative growth, right? What is the future earnings multiple? You're paying 30 times next year's earnings for a company with negative growth. How high are you? I mean, it's the same thing as like Nvidia. You're paying 160 or 70. Like, now again, they don't matter in a bull market, but at some point, people start realizing, like, whoa, they still have a lot more jobs to lay off. Because if you think about, like, look at Elon. I mean, he's fired 90% of the company. You can get away with it. Instagram is a dying business, in my opinion. TikTok ate their lunch, and then in general, like, if you're going there for inspiration on photos, I mean, now AI can generate any photo. You just type in a topic, and it'll draw you a fucking dope picture. Anyway, that's all I really can say on it. I mean, again, and I don't really even like to talk about fundamentals. I just like the idea of, in a bear market, you don't get rewarded multiples. Isn't JP Bennett from the regional bank collapse? Are big banks a short? Yeah, I'm short JP Morgan and the XLF by shorting FAS. I mean, I know some people shorting Goldman, Morgan Stanley, all of them. The big banks are a short, in my opinion, because they still have junk on their balance sheet just as much as anyone else, but their net interest margins are going to get way worse because they can't stop. They're not going to be able to get away with paying 0.1%. And then also, too, you have to be just cognizant of, like, a credit crunch means what? Credit is crunching, literally. Like, they're not making loans. The only way that some of these banks are going to be making money is trading, essentially, right? Or doing whatever the hell they think is the right thing. So, again, people say, well, the interest rates are going higher. They're going to make more money. It's like, not in a slowing economy. Like, where are they lending out this money? And if anything, the more money they're lending out at this point is going to what? Riskier folks. Potentially, right? There's much bigger risk when unemployment rises. This is the hardest part with, like, the banks is, like, people, like, yeah, they look good until unemployment starts rising and the economy starts slowing and hitting the shitter hard. Because commercial real estate's dead. Dying. Well, what happens when the consumer get strapped? What happens when people start losing their jobs? What happens when they stop paying their mortgages? What happens when, again, as they're doing, they're not paying their credit cards? Who has all the counterparty risk? Again, I don't know how this doesn't end badly. I mean, you've created such a vortex of complacency and mismanagement of resources that it always ends badly. It just kind of is. You blow bubbles, they burst. And honestly, who knows why they do this? But they love to manufacture their own crises to take advantage of. So, I mean, will JP Morgan go out of business? I don't know. I mean, you can pick which bank will. Again, you can play the basket of stocks. You can pick individual names. I like how people are, like, piling into JP Morgan because they think it's safe. It's like, no, they're not safe. I know for a fact their business is slowing dramatically. But doesn't necessarily mean it'll, be obvious in their earnings because they're really good at manipulating the numbers to make it look like they can't lose. But the reality is, like, their net interest margin, that's peaked. Their loan portfolio growth, that's over. Right? Their risk growing, right? Default rate's going to grow. How does that affect them? I mean, how easily can they navigate it? Now, again, if you don't want to short JP Morgan, I get it. Short XLF, short the KRE, pick your favorite bank that you want. It's all the same. Some will be better than others. I just think at some point, all the hot money that ran into JP Morgan will get unhotted, will get cooled off, like this big gap up, right? Like, that's going to fill. I'll see you back at 127 pretty shortly, in my opinion. Options were cheap, too. So, any other thoughts, questions, concern? If not, I'm going to wrap it up. I mean, I just keep it simple, stupid. I try to warn people constantly, like, you're in a bear market. Now, this is why I tell people, have a journal. You have to know, like, what are the facts? Because if you don't focus on the facts, the opinions and the market moving will sway your emotions. You still have to manage your trades. Like, that never ended. We still got to be cognizant of what's to come. But I mean, to me, it's still a bear market. Anyone arguing otherwise, great. I love when the consensus is the bear market's over and the breath is dying. Dollar starts waking up. The VIX is at complacent levels. And there's a shit storm of things coming. We've talked about it. I mean, I try to post the evidence constantly on Twitter, just showing you guys like some of the economic information. It is bad. It is so bad, and it's getting worse. I mean, Apple's very good at under-promising, over-delivering. So I wouldn't even think too much about what Apple... People know that. And it's just whether they get penalized for it. Like, and this is why I tell people all the time, like, be careful trying to trade through earnings. You don't know the reactions. You might even... You know the numbers. I know the numbers. Everyone knows the numbers. I don't know the reaction. They will under-promise, over-deliver like they always do. But will that under-promising be rather... I mean, will the market not take it well? Will that tank the market? Yeah, but we also could see it like pop first and then flop. I mean, it's just one of those things where it's like, you know, maybe the 3-day rule. Maybe they announce like a $100 billion buyback. I have no clue what they'll do. But to me, a buyback now becomes exit liquidity. I've said that for a while now. Like, if idiots buying stocks at the high are now exit liquidity. Yeah. I mean, there's no guarantee. Like, Meta's earnings, yeah, were absolute crap, in my opinion. When they rallied, they gapped up. What do you do? Again, at this point, I'm not really trying to, like... I have feelings, but I don't care about my feelings. Like, I just know near term, I don't know. Longer term, I expect certain things, and I've defined my risk. Like, this whole feeling of how to trade around earnings... I've spent decades trying to trade around earnings, and my feelings led me to what? Nothing. I thought and felt something would happen. It did the opposite. I felt and thought it would work, and it did. You go back and you analyze your earnings expectations versus what happens. You go back and you literally, if you're good at this, you find out that you're literally 50-50, whether you're right or wrong. So you might as well just flip coins, or you wait till after earnings, as we talked about. The first mouse gets the trap, the second gets the cheese. If the stock goes in the direction you thought it was going to go and you miss it, guess what? There'll be another one. But sometimes you see stocks pop, then flop, like we've seen a lot. That's the better trade versus trying to anticipate anything. Because if it dumps, well, it dumps. But if it pops, now you're giving like a gift. That's why it's like Meta. I'm like sitting here like, it's a freaking gift. Intel popped, right? Amazon popped, right? Like, all these names seem to have popped. Does this make sense? Because I think a lot of people in their mind try to like structure the market to what they think is going to happen versus surrender to the idea that no, you don't know. And so sometimes the best thing to do is to wait, layer in small, pick and choose your entries, and be patient. Like, your brain is just like focused on, and I mean, I'm saying yours, like mine, same thing, like shorting. Gotta go now. Gotta go now. Gotta short this price. I don't give I don't care where it's at. Whatever. Short Apple now. Nah. You know what I mean? Like, that's what the brain starts doing. Can't do that. Can't do that. All right. I'm going to wrap it up. Got a busy day. Got some real estate stuff going on. If you have any questions, reach out. Remember, tomorrow, Fed's 2 o'clock, 2:30. You'll see the... 2 o'clock, the news, again, they're going to raise. It's the 2:30 press conference. And then usually the Thursday that matters. Now, Eric NH noticed that. We started paying attention to that a couple years ago. It's like, man, Wednesday would do this, but then Thursday would be the real day. But then also keep in mind, now, Friday you have the jobs number. So at this point, whatever happens, you got to trade the extremes. Do not get caught shorting or buying in between swing points and areas. Because if you don't trade the extremes, you're going to get into this place of what I consider unknowingness and paralysis. Like, you'll be like, I don't know if I'm in a good spot. I believe, and you'll argue for your trade naturally, right? Like, you don't get into a short trade going, oh, it's going higher. No, like, if you get in between swing points, you're going to start arguing that, well, I guess I just have to hold. And the question becomes then, is that going to mess with your psyche? Because you're not at the best spots. Like, I shorted JP Morgan yesterday. Like, I'm not even thinking about it. Could care less at this point. That's where I want to be. If it rallies back at some point, I'm adding more. That's all I need to know in my brain. So try to get to that like very defined, specific mindset where you're at, so that when things happen, you're not surprised by them. Does this make sense? Because I think a lot of newer traders, even, man, you can be an advanced trader, still thinking, like, again, you look at today's action and go, I got to short this. Well, if you didn't short the highs, do you have to short this? Is it the best thing to do? I don't know. Time will tell. But if precedence repeats, you're probably going to see some volatility up and down. Now you're going to have to wait for lower highs, maybe equal highs, maybe, who knows? That's where like the psychology of like being able to like project your own path through the processes of probabilities and go, all right, well, I short JP Morgan yesterday pretty good. I didn't go all in because, again, you never know, it could rally back. But now that it dumps, I can't chase. Now I need to either identify where I'm going to reload, or I can go to other names too that might play the same BS game. Because if you can't enter right, you can't sit tight, right, Bamf? Because if you can't sit tight, then it eats at your psyche. You're probably going to overreact, potentially do the right thing or wrong thing. It's more like wrong thing, sorry. And you're going to get yourself in a pickle. That's why, like I tell people, trading isn't hard. It's managing your brain, and it's managing what happens when things aren't what you expect, right? It's like baseball, right? Like, you don't know the pitch is coming, but you got to try to anticipate when to swing and not. And if you can bat a good batting average, you're a fucking legend. But if your brain isn't stable and you're one of these people that's just all over the board, and you don't have a journal, and you're not you're not taking notes of the things that you need to focus on, then you're literally recreating and manifesting a new trade every time you think. Well, then again, how do you expect to have high probabilities if you're just literally redrawing your brain or redrawing the trade through your brain because you don't have certain things you're looking at, and fundamental beliefs and ideas and structures and evidence? At that point, that's called gambling. It's no different than going into the casino, rolling the dice, and thinking you're going to win. Your thought does not create your reality. So, all right, on that note, appreciate the love, support, and generous donations. Again, donations are never required. I always tell people, like, I want people to win. I just hope if you see value in the education and it's free, I guarantee you're not getting anything like this for free on the internet. And that's, I say, when the student's ready, the teacher appears. I love it when people want to learn. And if they get involved in the Discord room, I teach you, you teach me. More like we all become each other's mirrors to help each other be honest with each other. Because there's going to be times where I'm not right, you're not right, but it's good to hear evidence-based, rational conversation with other folks. And then also support each other. Because there's going to be times where you're like, this is hard. Like, who's not going to argue that this hasn't been hard? Yeah, chop, chop. Been real hard. All right, on that note, have a great afternoon. Hit me up if you got any questions. I will talk to you guys and gals later.